God gave me the
Hello.
gift of gab.
You know what? And everybody watching these recaps appreciate your gift of gab.
I hope
And
so.
with that, we welcome everybody. Everybody who loves Peter, you can post a comment below where this video is posted or in the members area. But we are back, Trader Travis and Peter. I was kind of joking mentally to myself. I never said this to Peter, but I was like, Peter's representing the option profit formula, the Success Academy. I was like, I'm representing Jesus today. I was like, hey, that's kind of, I was like, I should be representing my own Success Academy and formula. But this is our weekly recap where we talk about the stock market, talk about the trades we're in. I'm letting people, walk, journal our 5-year retirement plan, kind of keeping people up to date on that. Everything we're sharing is for educational, informational purposes only. I don't. Peter's going to actually have a lesson on this. I don't think it's smart, or I won't say smart. That's the wrong word. I don't think it is the best route to success if you try to emulate exactly what we're doing. And then later on, we'll explain why that never works and why trade alert services never work. Why you never hear anybody say, I became a millionaire from a trade alert service. When you find one, let me know. I'll sign up to that trade alert service immediately because they've solved the issue. They've solved the mystery. But think about that. Have you ever met somebody that said, I became a millionaire by trade alert service? But contrast that to, have you met a person who said, I became a millionaire in the stock market or real estate, right? There are ways to become a millionaire, but I've never seen a trade alert service be one of those ways. And there's my theory as to why, which we'll cover later. But with that, what I'm going to do is give the floor to Peter first. He's going to cover a couple of trades, and I'm going to end with my public service announcement for the day, talking about the second topic I talk about the most, stock market insurance. The first topic I talk about the most is getting out of debt, but we're going to talk about stock market insurance today. And I see your screen, Peter, so we're ready to rock and roll.
So basically, I am in just these AT&T ones we were talking about before. Those are just, I'm testing out different theories on AT&T. But I did paper trade Coca-Cola today because it triggered a monthly trade triangle today. It's at a plus 100. Today it triggered a monthly. Today's kind of a down day for it, but yesterday was a big up day. So I figured, okay, I'm going to trade something with a lot of time. So I did, just to kind of give you guys those number of contracts, you trade the number of contracts based on your account. This was based on the percentage of the account that I was trading. So it represented about 1% of that account. So that would be my max loss, is 1% of that account. So that's the only real open trade I have on my real trading platform. I do have my covered calls with AT&T. AT&T, I think, it fell down and it's starting to come back up again. So it's looking like, if things work out the way they're working now, my closest covered call, which has 17 days to expiration, might be out of the money and I won't have to worry about it. But we'll see what happens, and I'll keep you guys posted as we go through on that one, because I'll probably either buy that back or have some other solution to it so I don't lose my shares. That was it for my trades. The only other thing that I wanted to just talk about, and this, Travis touched on it, we had, this is actually my brother who posted something in our members area that kind of talked about, I was giving him some advice. I give a lot of people advice about, if you're having trouble struggling with the stocks or portfolio you're working with, if you're in the Success Academy, you get to see all the stuff Travis trades, and that's how I built my list based on our hot stock formula, but a lot of it goes to, like, Costco. That's on my list because that's what Travis trades. Walmart on my list because Travis trades it. McDonald's is on my list because Travis trades it. So what I was trying to tell him was, if you look at someone that's a successful trader and you're following them, like I follow Travis and a lot of you guys do, use his list. He's already done all the work for you. He's done the fundamental research, the technical research. He's done all that stuff for you. So it does make you a little bit lazier. You don't have to do all the work, but sometimes it's like working smarter, not harder, is kind of how I look at it. So, use his stocks to trade from, but don't try to emulate his trades. And I know my brother he posted something that he was trying to emulate the trades and he was running into less than profitable trades. a lot of that probably has to do with you're just not getting in at the same time Travis is getting in, so his trade is different than yours, even though it's the same technique or maybe the same strategy, like a credit spread, the same timeline. Just because of the time of entry, it's going to change things. That's number one. Number two, you could just be running into the way the market's going, because the market's just we had a big pullback and then today's a big up day, right? So if you had any bearish spreads, you're kind of ticked off that the market's going back up, whereas all the long-term holders are really happy that it's going back up. So my best advice to you is to just learn what he's trading, or take the stocks he's trading and apply the principles that you're learning in the Success Academy, apply the templates from the Success Academy to place your own trades. And that's what will make you more successful. And I know that because that's what's made me successful. I've taken a lot of the stocks and the ETFs that Travis has given me, and I don't trade. The only time I trade exactly what Travis trades is when I cheat. When him and I are doing a call like this and he's placing trades live for you, I sometimes go in and place the same trade. It's cheating, but it's okay. It's a smart way of cheating for me. But that's kind of what I was getting at. You can't really emulate what he's doing, because by the time you see this video, it's a day or two later. He's already placed the trade, and a lot has gone on since then. So he may not have as much of a loss if it turns out to be a losing trade than you have. So don't try and emulate everything he's doing. Just take what he's doing and then apply the blueprint and the principles to it. And I think you'll find a lot more success. Plus, you will eventually learn how to just kind of, the Success Academy has it out there for many of the members. And for those of you that aren't in the Success Academy, you got to figure out how to sift and find good stocks. And then the best way to determine if those are good stocks for trading options is to paper trade them. And you paper trade them for a long time. And when I say a long time, it's like 6 months to a year is a long time. Most people won't do that, but reality sinks in. 4 years later, you wish you did that 4 years ago, because you'd be in a better place. So anyway, that's it. I said I wasn't going to talk very long, and I don't think I did, even though I did kind of go into a lot.
No, buddy, you didn't. That's wow, that's a record for you, Peter. And everybody
already took up an hour and a half of Travis's time.
And everybody, just to let you know, I tease Peter because both our wives think we talk a lot. So whenever I tease him about talking a lot, I'm literally teasing myself. I'm not talking about him, because we're both the same. He just happens to talk just a tad bit more than me, but we talk a lot. We both do. Hey, maybe that's why we're doing, and we have the kind of passion project that we have, recording these recaps, being trainers and coaches and mentors. We have a lot of things we want to share with the world that we think is beneficial. So with that being said, what I want to do is philosophically, before I show you my charts and stuff, philosophically rant, not rant, just kind of talk. Give me 1 second. Let me get my slides ready for you. Philosophically talk about this concept Peter was just talking about, where my opinion, and why I say trade alert services don't work, is you should mimic the stocks, the thought process, and the blueprint, not the individual trades. And so before we hit record, I was telling Peter, giving Peter an example of why trade alert services don't work. It's like you get in the trade based on a trade alert service, and everybody has a different psychological makeup. I've been bankrupt before. I'm ultra conservative. I don't like losing money. It could be viewed as a weakness, but I understand about myself. So let's say I was in a trade alert service and the trade was losing money and it gets to $2,000 loss. Well, based on how I am made up in my comfort level, I would exit. I'm like, oh, that's too painful. I exit. But let's say the trade alert service did not exit, right? It didn't follow their little rules that they never tell you the rules. That's another thing. Like, it's all a mystery. You don't even know why they're getting in and out. So you're just pretty much putting blind faith in someone to help you become rich. That's just not smart. So, what if that trade does not exit per the trade alert service, and then the stock eventually turns around, recovers? That same trade we both were in per the trade alert service, it turned out to be profitable. But not for me, because I got out of the $2,000 loss because my pain point was different. That's why you shouldn't blindly, or that's why you shouldn't that's why I always advise against mirroring other people's trades because they have a different psychological makeup than you. My pain point is in a totally different place than Peter or his brothers or any other members. So I can take something that maybe they can't take, or vice versa. Like I can't have like 10, 15 trades open, just completely screws up my mind. But some people can. I can't manage that many. So that's what I'm saying. So anyway, go back to what I said. Mimic the stocks. Look at the stocks I've given you on the Excel. Look at the date I gave those stocks because I went through the filter. They were high quality stocks. See if they went up or what happened. See if the majority of them went up since I posted those stocks. So you can mirror those stocks and then apply the strategies we teach you those. Mirror the thought process or the blueprint, meaning that we talk about insurance a lot, right? And that leads to my thought-provoking question of the day I wrote down here. What's more likely to happen in the next 10 years? Your house burning down or the stock market crashing? Well, in my opinion, what's more likely to happen in the next 10 years is the stock market crashing. So let me ask you this. Why is it that people have insurance on their homes and not on their investment portfolio? So if it's more likely that in the next 10 years, the stock market will crash versus your house burning down, then why do you have insurance on your house but not on your investment portfolio, right? It's backwards. It's backwards because we haven't been taught that concept. That's what I mean. Like mirror that thought process of always thinking about worst case scenario, preparing for that, prepare for the worst, hope for the best. Then you'll be fine. You can apply that thought process in various different ways. I just do it, and I'll give you an example now where I'll share my screen. I'll show you how I apply that thought process, but you could apply that thought process as simple as using Market Club's trade triangles and getting out when you get an exit signal. Going to all cash, that is some form of insurance because you're protecting yourself against a loss. Because again, that thought process is we always want to think about ensuring our portfolios are protecting ourselves against a loss, and that's one way to apply it. Another way to apply it, can you see my screen, Peter?
Yeah.
Okay. Another way to apply it. Another way to apply it is to actually buy insurance for your portfolio. And this is for those who recognize this, this is a part of my full stock market insurance training that I teach the Success Academy members, walking them through visually their fear. A lot of people have this fear of buying the insurance and losing money on it, which is kind of funny because that's you actually want to lose money on your insurance because you don't want worst case to happen, right? You actually want the market to keep going up. So they're like, oh, I'm going to buy insurance and I'm going to waste all that money because it is expensive on the front. Well, I won't say expensive. It has a cost associated with it, and that's what holds people's back. So I walked them through this blueprint. Okay, let's carry this out 10 years, like the bull market we're in, a 10-year bull market. And you start with 96 grand. Your friends on the left, they don't buy insurance, and they earn the stock market's average of 7% a year. You can see how their portfolio grows through 11 years. You buy insurance each year, and the contract I use in the training, it averaged about 4% a year. The cost of that insurance averaged about 4% a year. So 4% of 96,000. So because of that cost, it does reduce your returns. Your friends are earning 7, you're only using 3. You're only earning 3 because each year you're buying insurance, or every 3 years you're buying insurance. So anyway, carry this out to 10 years. This is what it looks like. Yeah, you feel like an idiot. Your friend's account is at 202,000 or 188,000. You know, you're only at 132,000. So that is what holds people back. And this is just a fact. This is a reality. It will hold back your gains. But I said, okay, what if on year 12, though, we have a stock market crash? Then that's when you see the benefit of insurance. Your friend's account gets gutted and cut in half, or more than half, to about 90 grand. But because you bought insurance, you protected the value of your account, and your account is only about 127,000. Because you're able, in the training, in the insurance training, I show a real life example of how my stock fell, I think 30–40%. I filed an insurance claim. I got all of my money back, put right back in my account. So my original investment was protected. The only cost I had was the cost of my insurance. And that's why you see that 132 go to 127. Because again, that was just, I only lost 4%, which was the cost of my insurance that year, right? My account is protected. So model that thought process of trying to find ways to protect the value of your account. This is just one way of doing it. All right, now moving on. I'm going to cover a real life example here. One of my model portfolios, I bought DIA, the ETF DIA, which is a ETF of the Dow Jones Industrial Average. Why I'm not worried about a market crash. Again, modeling this thought process or the blueprint. Here's how I actually did it down here. All right, I'm not going to, because of time's sake, I have been talking a while. I'm just going to show you the numbers here on this right column here, right? I brought in some trades where I'm trying to pay for my insurance. I buy the stock, same thing, sold it, I'm buying it back here. I'm selling an insurance contract. Let's say I want to buy it back at 265. That brings in income. Then I actually buy the stock here. But let's carry this out. What would actually happen if this market went to zero right now? Right, I'd file my insurance claim, and because I actually made money on my puts and I made money, selling my stock for a profit, yada yada, doing these other, strategies where we get our insurance paid for. At this point, my worst case is losing 10% of my invested dollar amount. That's 10% of my stocks. 2%. Yeah. Did I say 10%?
You did.
Oh, sorry. 2%. Yeah, that's why I have it written down here, because what was in my brain doesn't always come out what's in my mouth. So, and I'm not even done. This is only in year one. This is something I started this year. So I have 2 more years to keep applying my strategies to recoup my insurance costs. So already, just in 5 or 6 months, I've already reduced the cost of my insurance down. So worst case is I lose $1,200. Even if the market crashed 50, 60%, I'm only going to lose $1,200. And again, I have 2 more years to keep employing my different strategies. So that's what I want you all to model, that concept of, hey, that's insurance, and the blueprint of, oh, well, Travis doesn't usually pay for his insurance. He gets other people to pay for it. So that's what I want you to model, because we can have 100 ways of applying that concept. I think if you try to carbon copy and mirror me, it won't work. So I want you to be an independent thinker. We want to empower you to be able to do this on your own. Because if you mirror me, you're not doing this on your own. You're not developing the psychology of a billionaire investor like Warren Buffett, right? Then if something, happens and Travis is not around, you're stuck, because you don't have me here to show you what to do. And I never want you to be in that position where you're dependent on someone else. I want you to think independently and understand why I'm doing what I'm doing. And then you can model that. Does that make sense, Peter?
It does.
Okay, so now I did talk,
but it always makes sense to me. So some people, I can imagine some people that aren't familiar with our strategies, and even some of the folks that are in the academy might be a little lost at times, and that's okay. The point isn't to be able to. We can't teach you every single thing. You're gonna have to figure things out on your own to some degree. We've given you all. It's just like if I give you a new bike, I can't. And I can teach you how to ride it, but I can't tell you how to get to your house per se, right? Mm-hmm. You've got to do that part. So that's why Travis stresses this all the time. I stress it all the time. If you have a brokerage account, just paper trade everything. So go out there. I mean, you don't have to always buy your insurance exactly the way Travis does it either. If you want and you don't like spending that much money, so let's say Travis bought a $280 put. You could buy a $275. It's going to be less expensive. You don't have to go out as far if you don't want, but that doesn't make sense because you actually do better by going out farther. But these are all things that you should be doing on paper. You should be doing all this stuff because a paper trading platform will play out the same way a real one will. And if you do that, I guarantee for a year from now, you will be 10 times better off than where you are today.
And I am sorry for taking so long today, but I do want to give one more thought-provoking, it's not a question. Well, yeah, it's a thought-provoking question before I leave everybody. Here's a general market, just for people who want to know what we think about the general market. Business as usual. Market doesn't just go straight up or straight down, right? You need to be prepared for the gyrations it has. And currently is in a gyration of going down. I have some simple trend lines drawn here. The market was going up all year. It broke this little simple trend line, and anybody can draw. I use Market Club, but for time's sake, well, even if you use Market Club, which I have pulled up here, I already showed you the S&P. You can see when we got a signal right here on 5/7, a weekly red trade triangle that the market was going to fall. All right, you come here, and 5/7 is right here, a little bit below this trend line. So the Market Club and the trend lines will get you close to the same point for those who don't have that software. I do advise you to use the software only because it puts a barrier between trading on your own emotions. A lot of people will second guess themselves. They'll draw this trend line, see prices clearly trading below it, but they second guess themselves because it's them drawing the trend line. They don't believe, oh, the market may fall. So the software is telling you, and based on the history of the software, is fairly accurate enough for you to make money. You can believe that more than you can believe yourself. It's a self-confidence thing. So one of the psychological tips to help you find success. Anyway, with that being said, I draw an opposite trend line on the way down. So now what I'm waiting for is either a market club trade triangle to tell me that prices are resuming, or if you're using trend lines, you're waiting for prices to break this trend line and go back up and stay above that trend line. So that's my market analysis. Now, my thought-provoking question is for buy and hold investors. And what I want to do, I was looking at this today, I'm like, gosh, it sucks to be a buy and hold investor. All right, let's get rid of this. Let's draw these circles here, these little green circles. Let me get rid of this one right here. And the thing is, buy and hold investors, right? You buying and holding. I believe in buy and manage, but buy and hold tells you don't time the market, don't get in and out. That's a loser's game. Okay, let's look at this. If you had bought here at the top, which happened to some people, January 2018, you hear the market took off, because it did. It just like launched up. That's when people get greedy and they feel like they're missing out and they want to jump in. Okay, you buy here, it immediately went into a correction. So you had to endure all of 2018, which was even stressful for me. Now we fast forward to June 2019. So that's what, 18 months later. 18 months later, your account is lower than where you started. How does that feel? You had to endure 18 months of stress, the market going down, then the market going up 30% at the beginning of 2019. So what? You didn't participate in that. Why? Because you're still waiting to get back to break even. That's why I'm like, when people be like, oh, the stock market went up 32%. That's only great if you benefited in that 32% run up. But if you were unfortunate enough to be a buy and hold investor who bought back here in 2018, you're still not to break even. And by the time you got back to break even, you're all excited. You're like, wow, it's finally higher than it was a year ago. What happened? We went into a little small pullback in price. So now you endure all of that and your account is still lower. How does that feel? Right? Doesn't feel good, which is why I just abandoned buy and hold years ago. Now, I'm not saying options is better than buy and hold. It's just a different approach. What options allows you to do is capture profit along the way. That is what I hate about buy and hold. You can't capture the profit along the way. You can't capture the 32% run up in the beginning of 2009 because your strategy is just to hold for the future. Who knows what the value of the stock market will be 20, 30, 40 years from now. It's just too much of a gamble for me. So I'd rather capture my profit along the way. Something as simple as renting out your stock shares. You have been able to rent out your stock shares all through these gyrations, each month pulling at least 2% conservatively out of your account. So you're capturing your profit along the way. That's the benefit of options compared to buy and hold. You wouldn't be at a loss for 18 months. You'd be like, well, yeah, the stock market is lower than it was 18 months ago, but you have 18 months of historical history of capturing profit along the way via option trading. And the best example I can give is our own 10-minute retirement trader case study. That account from beginning of January to now, I don't know, maybe doubled in price. Who knows? I don't know, but it's grown. That's the point. Our options account has grown from January to now, where a buy and hold account has not, is actually lower. And with that, I have nothing else to say. I've talked way too long.
That's a good recap, though. I think that comes down a lot of that comes down to what's your goal and what's your strategy too. What's your goal of buying that stock? We run into the same problems with a lot of folks. Right? It's like, no, I want to own the stock. Okay, why? What's your goal? There should be some kind of goal. Like it doesn't make sense to just, I don't know, buy a stock with no idea of why you're buying the stock.
Yeah, I want to own the stock. And this is very common. So if it happens, both of us will laugh. I want to own the stock. The moment it crashes in price, you're like,
I hate this stock.
Yeah, I hate this stock. I don't want to own this anymore. You're like, hold up. I thought you wanted to own it, right?
Right.
Totally common. It happens to all of us, but that's how you really know if you want to own a stock. Let it drop 30, 40%. You like, if you're not bothered by it, then you're actually a committed person. You want to own that. But if you start second guessing, then you really didn't want to own it. You just wanted to actually make money off of it, not, you don't want to own
Yeah,
it.
or you didn't have a true strategy for it. Well,
There you
you
go.
didn't really know what your true strategy was for it.
Yep.
So,
And every strategy should, insurance concept again, every single strategy should have a worst case scenario factored in. That should, every single stock you buy, every single option trade you place should always have worst case scenario factored in. What is the absolute worst that can happen? How do I plan for that? Then you only focus on profit. Risk first, profit second. Always focus on losing money, and then focus on profit second. Are you laughing? Because I'm thinking you're thinking.
No. That's exactly it. I learned that the hard way.
Yeah, I was thinking about that. I was like, yeah, that's just what happens. So, and that was a very hard won wisdom. How do we learn that? I didn't learn that by making a ton of money. Remember, I've been bankrupt before. I learned that by losing everything. So those lessons you don't forget. You're like, nope, never again. So now I'm trying to, that's how I give back. Yeah, I was a drain on the economy at one point, but that's how I give back, is like, let me make sure other people don't make that mistake. And let me make sure you all don't have to go through all the stupid stuff I've been through. So it just doesn't make any sense. So learn from my mistakes. You will benefit, create wealth faster. With that, I think that's it. We'll call this a wrap. I got to get off and look at my accounts today. All right.
Okay.
Y'all take care. We'll see you next week. Bye.